and welcome to Big Market Debate, a new weekly series initiated by ICICIDirect, where we will talk about equity markets, analyze stock trends, with a goal to help all our viewers become better investors. Today, in this first episode of Big Market Debate, I have with me Mr. Mehraboon Irani, MD and CEO, Gini Gems Consultants, and Mr. Bala, founder and chief market technician, cashthechaos.com. Welcome, sir. My first question is for Mr. Mehraboon Irani. Sir, till recently, we all were talking about sharper than anticipated recovery in our economy, and then comes the second wave of COVID-19. What impact do you see of the second wave on the GDP, as most of the states have gone in for partial lockdowns?
Well, if you ask me, it's impossible to predict the course of the pandemic and its impact on the markets. It's virtually impossible. But what can be stated is that over the next few months, or maybe 2 quarters or 3 quarters, we will have a world possibly post-COVID. So this COVID second wave has come as a big surprise, certainly in a country like India, where people had felt, oh, the worst is over, and now we are facing it. But if you allow me to state, this could be possibly the last leg before things get digested. Now, depends on what you read, what type of numbers you read, depends on you read the mortality factor, whatever. At the end of it all, nobody is saying that this COVID second wave is here to stay for the next 1.5, 2 years. It's like a question of, it will spread to states like Tamil Nadu, West Bengal because of the post-election scenario. It will possibly taper off in a state like Maharashtra where measures are being taken. But ultimately, the numbers will keep on swelling and we will top out maybe over the next 1 to 3 weeks. The point is there a world post-COVID? Answer is yes. Ultimately, it's the efficacy of the vaccine,
right,
the spread of the vaccine versus COVID on the other side. And somewhere I believe that this, as I said earlier, this could be the last leg before things get digested fully. And we have a world post-COVID, maybe over the next 2 or 3 or 4 quarters. So at the end of it all, this is a thing which is definitely affecting the stock markets. Stock markets across the world had gone up. India was no exception. India also went up. There are people going on predicting things will fall, things will fall, things will fall. So I think the COVID is giving an excuse for the markets to correct. We could have an intermittent low coming over the next 10, 15, 20, 30 days. Who is complaining about that? If that comes, let it come. But I personally believe we are having a solid bull market ahead of us over the next 1 to 3 years. Post this intermittent low being formed, maybe with COVID being a particular reason or cause or excuse.
Jay, what sense do you make of the heightened volatility in the markets? Is the correction done, or it's more weaknesses still that we can see in the markets? What is the setup looking like?
See, the market from an extreme short-term perspective, as long as it's choppy, counterintuitively, that's bullish for the markets. But I am from the short-term perspective, short to medium-term perspective. My idea of short-term to medium-term is about 3 to 6 months. And from that perspective, I'm seeing the market drop very sharply. From an extreme short-term perspective, from let's say a couple of weeks to a month time frame, I think the market could have, it could have already topped in February, but it can accommodate one last high beyond the 15,430 that we saw in February. But if the market were to drop sharply, that's the reason why I said choppiness is good for the bullish case. But if the market were to start dropping sharply below the 14,250 low that we saw recently, I think the dip is going to get much deeper. It's going to surprise a lot of people. And if you look at the Western markets too, they're also coming to medium-term resistance points. So the market is probably looking for direction from the global world. The global world is outperforming the Indian, rather I would say the Indian markets are underperforming the world, and that's where the uncertainty comes from. And so the important level to look for the Nifty and the Bank Nifty is 14,250, and for the banking index is actually slightly underperforming the Nifty. So if the banking index were to drop below 29,600, that will not be good for the market, and that's going to be the decider for the market.
Mr. Irani, for financials, if we talk about the banking sector, do you think growth is a bigger challenge than the asset quality?
I think even if you look at the banking sector, when the COVID came for the first time exactly a year ago, I think a lot of people, including me, including you possibly, had become very skeptical. The question was how much defaults will happen, who all will default, and people were just making an estimate. The things are going to be very bad for the NBFC sector, for the SME segment, for the banking sector, for the financials. I think somewhere along the line, the government became proactive along with the Reserve Bank of India, and things started getting digested. Now with the second wave coming, and also with inflation cropping up across the world, we very well know as far as the reduction in interest rate goes, that cycle is over. If anything is going to happen, maybe 2023 or whenever, we are going to see rate hikes coming. Maybe it will not come in a hurry because stimulus measures are in place, whether it's the US Fed, whether it's the RBI, rate hikes are not going to happen. But the point is that the interest rate cycle, the downward interest rate cycle is possibly behind us, number one. Number two, with the COVID second wave coming in, again, the uncertainties are coming to the fore. But on the other hand, what we need to understand is that most Indian corporates have done their job well. They have brought down their debt levels and all are ready for the new cycle to start. So as soon as you feel the COVID is behind us, maybe 1, 2, 3, 4, 5 months later, I promise you that corporates are ready with a much leaner balance sheet to come and take money from banks and possibly start going in and setting up fresh expansion or fresh even greenfield projects. So for that very reason, I said earlier, we may have a 5% correction. We may possibly see stocks coming off 10, 15% from here. I will call it a correction because I very well know that post that, we are going to have a market which can only go up. And therefore, this correction, if any, should be welcomed and should be used as a buying opportunity. The only concern, as I mentioned earlier, is inflation. And God forbid, if we have a serious second or third wave of COVID coming in the developed markets, that could be a problem. And the markets are already reflecting right now. If you look at things properly, the Sensex and Nifty have just not gone up in the last 2 months. But as the broader markets, as the mid caps and small caps which have started going up, which allow me to state, is a fairly healthy indicator. So I believe that banking and financials is a space where I would not like to stick my neck out at this particular moment because we are having a dirty thing called COVID second wave in front of us. But somewhere along the line, I think like what happened a year ago, I think things will get panned out in somewhere at certain levels. People will start looking at it because ultimately financials is the barometer as far as India's growth story going ahead goes.
Right. Jay, what is the possibility of Bank Nifty breaching 30,000 levels?
Yeah, 30,000 is not an important level for the bank index. Basically, it's 34,360 that's more important. As long as the banking index remains below 34,360, it will maintain a bearish bias. Likewise, the Nifty, as long as it's below 15,100, it will maintain the short-term bearish bias. So, for the banking index to take out this resistance, it's important for SBI and HDFC Bank to perform well. They are actually trading below key supports. HDFC Bank is below 1450 and SBI is below 340. That should not have happened. So that the mantle has fallen on ICICI, Axis, and Kotak Bank. So to lead the rally. So we need some support for the. It should transpire as a false breakdown for these two stocks. If that happens, I think the banking index has potential. But we've been seeing the banking index underperform the Nifty for the last several weeks.
Mr. Irani, if most of the sectors, we talk about most of the other sectors like IT and industrials have seen a PE multiples decline year to date, if we talk. Can we say Indian equities are cheaper now and it's time to really chip in for, as you said, this is the right time. If there's a further correction in the markets, it will probably be the right time to really accumulate quality stocks.
See, let us look at things this way. If you look at the last 1 year of the markets, the way the markets bounced, the way the markets went up, and allow me to state it, surprised quite a few, at least in the initial phase. What happened? The pharma went up, COVID scenario, pharma should be in demand. That's the way we looked at it. Then there was an aggression as far as China-India went. And people started talking of the China story and Indian specialty chemicals company. The specialty chemicals came next. IT, work from home, digital revolution. So IT sector went up, then it was Reliance for complete 3-4 months. And the private banks came to the fore, and post the budget and just around the budget, it's the public sector stocks which went up, and the government, the finance minister talked of privatization.
Right.
Point is that if we have a correction coming in the markets, which I'm not ruling it out, I don't want to predict it, but if we have a forward which spreads a little bit more than what even today we are expecting it to happen, then we could have a fairly decent correction in place and an intermittent bottom big form from where we should possibly make a new high in the coming months. Now, in that particular case, all these expensive stocks which you are talking about, especially IT possibly, even to some extent the FMCG sector, while you and I may call it defensive, and it will be defensive till the time we are worried of the COVID scenario right now. But since they are very expensive, I don't see them outperforming on a relative basis over the longer term. We need to understand that quite a few of these sectors which are in demand, most of the stocks in this sector are quoting at valuations. There's somewhere you feel a little bit uncomfortable. So if you ask me on IT, I will say it's a great sector, it will continue doing well. But if they correct from here by 10-15% more, it will honestly not surprise me. That exactly is what's happening post the TCS and Infosys numbers. You see what is happening to these particular stocks. It's not that the numbers were not good, it's that the expectations were too high. And analysts, in their wisdom, have gone on extrapolating things, making possibly the stocks go up a little bit faster and sharper than what they should have it otherwise. So I think I remain positive on the sectors which are doing well, which are looking expensive. But I will not certainly be surprised if they share a little bit more weight as compared to the others if we have a correction in the market, which most people are talking about.
Jay, any pocket of strength that you see in the market right now?
The pocket of strength at the moment is in, I would call infrastructure, and infrastructure includes IT. It's not just the regular classification of infrastructure. I would say IT, Siemens, and Pharma, of course, and a select something like power grid. I would say those are all showing strong signs. And anybody trying to position themselves for fresh trades or fresh positioning, you must focus on this. But the risk reward even here is coming down. So people should be sensible about their allocation to these strong sectors. If possible, pick them up on a pullback.
What in IT sector do you like the most, Jay?
See, you should go beyond the frontline names. Something like if you look at Naukri.com or which it trades at InfoEdge or something like JustDial, they're actually doing well. The frontline names like Infosys and TCS, they could probably have completed a short-term top. And if Infosys drops below 1300 and TCS drops below 3000, it might indicate a correction for it. Likewise, look at the CNX IT index. As long as it maintains about 25K to 24,200, I think the IT sector as such is quite safe. But anything below those levels can bring a slightly short-term correction for even the IT sector. So, so look beyond the frontline names. Look into the second-run stocks on the IT space.
Mr. Irani, we saw a brilliant up move in the metal stocks, if we say, and the price movement there has been, every month we are seeing companies increasing the prices for the metal products. What is expected in the metal sector? Do you like anything in this space?
I believe that predicting the metal sector, metal stocks for the next 1 year is extremely difficult. My personal feel is that we will see them go much higher, but maybe next year at this time, it could be lower than where they are today. So as far as metals go, it was a great trading bet. Trading bet means you could take a positional bet as far as most of the metal stocks go. But the point is somewhere you will have to learn to possibly lighten yourself. Now that becomes a very difficult call. So it's just like most commodities, you need to understand the cycle. Now in this, what I like names like a Tata Steel even now. I think aluminum stocks with aluminum prices at the all-time highs right now, I think they are in decent shape. Even copper, if you ask me. So maybe an Hindustan Copper or a Vedanta also look attractive, along with maybe an Nanco in the aluminum pack. So there are quite a few names, stocks which have gone up a little bit sharply. People feel that, oh, the time has come for me to book profit. But I personally believe they could continue to surprise you on the upside for some more time. Besides that, there are some interesting mid-cap names like maybe a Kalyani Steel is there. So there are quite a few names in this particular space, which I think there is still some more room for upside. There are quite a few people already starting to predict that possibly they've gone up too sharply. I don't want to dispute that. I would like to state, yes, I'm with them on that. But I do believe that with the stimulus, with the money flow continuing, I think metals, the prices could go up a little bit further, possibly stoking inflation a little bit more on the whole. But one will have to live with it. But stating that, oh, I should buy a Tata Steel right now and next year I will be possibly 10, 15, 20, 30% higher, that may not possibly happen. The stocks have gone up a little bit sharply. The trade is still on the long side, according to me, but I would say it's a trade. So from a longer term investment angle at this particular price, I would like to stick my neck out and recommend my investors to go and buy into metal stocks for the next 1 to 3 years. The answer would be certainly no.
Jay, what is your view on the FMCG space, and any stocks that you think is the right time to really accommodate a few?
Yeah, FMCG is coming to an end of a short-term cycle. HUL has probably got fresh record highs coming and beyond 2,600, and even Dabur is looking good at current levels. But as I said, the market is performing without reliance banks. And so because of that, the FMCG sector is taking the doing the heavy lifting. So it's done quite a bit of move at the moment. So be sensible in your allocation. Yeah, a little more upside left, but it's not a huge upside. So I like from the FMCG space, Dabur and HUL at current levels.
What's your view on the Reliance? We just spoke about Reliance not participating in the market. Is this consolidation phase going to last longer for Reliance, Jay?
It's absolutely crucial that Reliance holds above 1830 from a medium-term perspective. I know if it were to take out 1830, it'll have a very negative consequence for the whole market because it's signaling something ominous for the medium term. But as long as 1830 prevails for Reliance Industries, I would see this as a consolidation, slightly negatively biased consolidation, and it needs to take out 2100 for it to resume its uptrend.
Mr. Irani, your view on the auto sector? I mean, some of the stocks have been performing very well, like Ashok Leyland and CV Space and Tata Motors, while Maruti has been lagging behind. What's your view on this space?
I think raw material cost is definitely a concern for this sector. And also we need to understand that there was a little bit of pent-up demand for 6, 7, 8 months. Nothing happened. And suddenly what was there in 6, 7 months plus the regular demand came to the fore. Stocks have done pretty well. The electric vehicle story also has possibly started being discounted by the market. So honestly, at the present level, not too enthused possibly to go and buy into auto stocks or recommend auto stocks.
Are you staying away from auto stocks, Jay?
No, autos actually is looking quite strong. I would say, 9,300 on the Nifty auto is actually an important support. So long as it manages, there is potential for at least a reflex rally around here. But, if you noticed the cross currents from the, FX market, the yen has seen a lot of depreciation, and Maruti has fallen from 8,000 odds to about 6,400. So given that even yen depreciation is actually quite often has a positive impact on Maruti, there might even be a short-term reflex play considering the oversold price drop for Maruti and the yen depreciation. So there might be a short-term play there. But the main leader out there is Tata Motors, and as long as it stays above 280, I think there is still upside potential for the auto sector. But the auto sector is should not break the 9,300 or the Nifty Auto Index. If it does break, the correction can prolong for a little longer.
Mr. Irani, since the beginning of this year, we have been hearing that mid-cap this year belongs to mid-caps. Do you believe the same?
100% yes. I think, see, what happened is you go back to 2017. And then what has happened in the market? We saw a new high with only 10, 15, 20 stocks possibly moving up, indices went up, but the whole 1995, 97% of stocks gave way sharply, and investors' portfolios never did well. And then COVID happened. Now, after all that, I think the action which is happening is most of these beaten down stocks are come back to life. So from the lower levels, they have moved up 10, 20, 30, 40, 50, 60, 80, 100% also. The reason is very simple, is they had become not only relatively, but even on an absolute basis, they had become under-owned. Nobody spoke of them, nobody looked at them. People were only talking about the HDFC banks and HDFC and TCS and Infosys and Hindustan Levers of the world, and most of the stocks went on the side. Also, I'm a strong believer, and which I have been going on stating, that possibly post this correction which we are going to see, I don't know of how much depth it will be. If we have a second round of COVID coming in developed markets, it could be quite some trouble for the Indian markets also. So after this correction, deep or shallow, whatever the correction is, I think we are going to have a lovely bull market. And in this bull market, I personally believe the mid caps and small caps could relatively outperform or continue to outperform what we are seeing for the last few months. That should continue to happen. Also, most of this expensive valuation sectors, like maybe an FMCG included, I think they will relatively underperform as and when the bull market really takes off. So if you have a Lever, a Nestle, or a Colgate with clear disclosures, I'm personally owning them. But the point is, do you go and buy into them right now? So there could be some disappointment in the relative performance of the stocks versus with others. And I personally believe it could be engineering, infrastructure, construction sector, and quite a few mid caps and small caps across industrials and across all the sectors, which could relatively perform much better than some of these expensive sectors and stocks which people have got a little bit over-owned on. So I think, yes, this could be the year, or maybe the next 2 years could be the year for mid caps and small caps. A small or a sharp correction not being ruled out over the near future, in the near future.
So the stocks that you identified in mid cap and small cap space, if you share some names with us.
I think with clear disclosures in place, I think there are names like Jubilant Life, Laurus Labs, JV Chemicals in the pharma segment. In the specialty chemical segment, I think you can just toss a coin and buy some well-managed companies. There are names like Supreme Petro, IG Petro, the manufacturer of phthalic anhydride prices are coming up, Make Money Organics, Thirumalai Chemicals. There is a choice of plenty. Coming back to the agro space and the auto space, I think you had asked me a question on auto. I think the best proxy for this would be names which are related to the agro space, be it in escorts or be it a VST tillers. Because I personally believe the farm sector has done well. We have a good prediction for the monsoon. So I think this sector could continue to do well. And if you want to buy something in the auto space, which is also a proxy for the agro space, I think names like Escorts or VST tillers will do well. In IT, I think companies whose valuation may be a little bit expensive, but this is a sector which will remain in favor. In the mid-cap names, there are names like Intellect, there are names like possibly Happiest Mind Technologies, and there are names like Tata Elxsi. All the stocks are at very fancy valuations. But if they come off, there could be a great opportunity there. So I personally believe there are a whole lot of names which will attract attention as and when the confidence comes back in the market. And if we have only a COVID scenario, which is going to upset the market, I think, allow me to state, market will buy the dips. But if we have a bigger problem, like a global problem as far as inflation goes, and inflation, I've always termed it as a cancer as far as stock markets are concerned. So if the inflation continues to surge, and if we have a second wave of COVID coming in the developed markets, then it could be a certainly deeper problem, deeper correction, deeper fall. But at the end of it all, I think the bull market is going to take its course and come back to the fore, and we will have a great bull market in the days ahead, post this sharp or small correction which we are seeing, and the mid caps and small caps will relatively outperform.
Jay, what's your view on the oil and gas space with crude now ranging between $60 to $70 levels?
See, I think a top is in place for Brent as well as NYMEX crude. I think a downtrend has started for both the varieties. I think Brent is dropping somewhere close to 49. So that being the case, it must aid the oil and gas sector. But it could be just a short-term help for the oil and gas sector, because crude is actually a barometer for risk on in the market. If crude were to fall quite deeply, I think the oil and gas sector will initially again see an initial bump up, and then possibly fall along with the risk off sentiments that could take place in the market. So watch out for it. Treat it as a short-term upside blip, not as a medium-term upside.
Yeah, what's your view on Rupee, where we have seen a fall of nearly 2% recently?
Yeah, I'm of the view that Rupee is going to challenge the all-time high, all-time lows at 77, and it's going to go beyond that. So I put out a tweet a few weeks ago that it's marked a double top at about 72.2. So it's a medium-term trend shift for the Rupee. Further depreciation is there. So this is also signaling an amount of risk off for the Indian market specifically. Usually, Rupee weakens along with market fall. So if the interpretation of mine were to come through, I think a little more impact will be there for the Indian markets. So record lows for Indian rupees on the cards.
Mr. Irani, my last question for you. What your view on the telecom space? What is the biggest challenge that lies ahead for telecoms?
Well, the space will continue to grow, but point is that do you go and buy the stocks in the sector, be it a Reliance for the telecom business, or be it a Vodafone, expecting it to be ultimately a good turnaround story, which a lot of people are betting on. The point is the numbers will keep on improving, but the way the telecom sector is right now being regulated, I don't see these companies making too much of money for themselves or for the shareholders. So despite the fact that this business is definitely interesting, more and more people are learning to work from home, digital story is there, I would possibly shy away from all the telecom stocks while stating that the absolute numbers will go up. And if I have to buy something, maybe I'll buy proxies like a Tata Communication or a Tata LXC. I think those are more interesting names if you believe in the digital story. So they are companies with great businesses. And whatever names I mentioned, clear disclosures, personally owning most of them, and I've advised my friends and clients to buy into them.
Thank you, Mr. Irani. Thank you, Bala, for being with us. It was a pleasure speaking with both of you.